Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist. And we are...
The Money Café.
We are indeed, Alan.
Great I jumped in there. We should have...
Great harmony.
We didn't do harmony.
James does it better, I agree.
Now, the cafe's a bit full today. Bit of noise, ambient noise, but anyway... There's plenty of noise going on in the markets and in the world of politics with Donald Trump, yes?
Yes, well, the revolution continues. Interesting, the language out of the White House seems to be we're not too fussed about an economic slowdown and the markets correcting, which has shocked Wall Street and some of the big business types because they all thought Trump was a stock market man, but it seems not so much.
No, that's right. So... I listened to a podcast this morning with Michael Wolff, who has published a new book titled How Trump Recaptured America. So I've written a few books on Trump, and this is the latest one, and it was a very interesting podcast. So
was that with Alistair Campbell and Rory Stewart?
Yeah, that's right.
I listened to that one too. That was fascinating, I thought.
So I'd recommend it to anyone who's interested in what's going on, but I suppose Wolff's main point is that Trump shouldn't be seen as a politician who has policies. He should be seen as simply what he is, according to Wolff, is simply somebody who wants to be famous. He wants to be the most famous man in the world.
And rich.
So he's interested in money and fame, and that he's basically operating day to day, has no end game at all, no kind of outcome that he's after.
But I think he's
this
also...
is Wolff's thing.
I mean, I think the rich thing is interesting because he's absolutely monetising the office. I mean, that's what's really shocked me, from the meme coins to the defamation settlements and suing CBS for $20 billion and getting $40 million out of Amazon for the Melania documentary and charging CEOs $5 million for a meeting. So he's already hundreds of millions in front from the office. So, he wants to be rich and famous, and that's where people start talking about sort of Putinism, that sort of kleptocratic, dominant, corrupt, wealthy, billionaire sort of system, bullying people. And that's where the whole Canada and attacks on the neighbours is so confusing for the West. If it's just about fame and money, how do you rationalise tearing into all those US institutions and attacking all your friends? I mean, that just doesn't make sense.
Well, it only makes sense in the context of wanting to be famous and make money. I mean, there's no kind of policy endgame. I mean, I interviewed, after listening to that podcast this morning, I interviewed Bruce Walpy, who's in Colorado at the moment, who's the, what is he, the study...
US Study Centre.
US Study Centre. So, and he's kind of a close watcher of these things, and he told me that there's a lot of anxiety in the US at the moment, obviously mainly from those who didn't vote for Trump, which is half the country. The other half, the half that are did vote for him, are all cheering him on, so... But Bruce kind of disagreed with what Michael Wolff is saying, which is that, I mean, he does have, according to Bruce, he's got policy aims. He is in favour of tariffs. He is trying to, withdraw America from the rest of the world.
Well, I mean, and obviously the anti-DEI thing, but I mean, no one thought being anti-trans meant blow up the transatlantic agreement. I mean, it's just absolutely bizarre that he's launching all these attacks, which is different from what happened the first time. So that's where people talk about the Russian play and the Putin influence, which more and more people are taking seriously, because a whole bunch of CEOs met in Washington yesterday, and they said that tariffs wasn't their biggest worry. It was national security. It was winding back US aid. It was degrading the FBI and the CIA. It was abandoning Europe. I mean, Macron's just had a meeting of 30-plus countries in Paris. The US wasn't there. I mean, are they going to start shutting their 700 bases around the world? I mean, and you just have to ask that question. What would Putin want Trump to do? And the answer is withdraw from the world, i.e. shut down US aid, degrade US institutions, and sow chaos and disunity in the West. And it's almost like, well, he's doing exactly what Putin would want him to do. Why?
Yeah. So we have a few questions about what how investors should respond to this. So we might just leave that until the questions. In the meantime, it's interesting that Mark Carney's now Prime Minister of Canada, taking over from Justin Trudeau. Mark Carney being the former governor of the Bank of Canada, and governor of the Bank of England. So he's kind of a technocrat, right? I mean, he's a technocrat turned politician, but he's an interesting character.
I think he's the absolute perfect guy for the times. I mean, 10 years at Goldman's, Harvard, Oxford. I mean, he was the ice hockey goalkeeper at Oxford. So he's had market experience, plus he's had obviously 6 years at Bank of Canada right through the GFC, and then 8 years at Bank of England right through Brexit, and then 5 years at Brookfield, leading climate and chair of the board, and they manage like 900 billion globally. They're like sort of the Macquarie of Canada. And he's great at managing a crisis. And the Canadians have the most leverage of anyone over Trump with, ultimately turn off the electricity. So this sort of Western alliance to keep the guardrails around Trump, Carney is the perfect man. And he's already talking about selling US bonds. And that's sort of leverage. And the ultimate leverage is, US is no longer the reserve currency and we're selling our bonds and pay us back the $36 trillion of US government bonds that are outstanding. I mean, that's the biggest card to play if you're looking for a market solution.
I was thinking when I saw Mark Carney get appointed, I thought, it wouldn't be too bad having Michelle Bullock as PM here, really. I mean, she's a very good, calm presence. I was thinking maybe Phil Lowe, but he mucked it up, so possibly not.
Well, the better comparison is Glenn Stevens, because he's now the chair of Macquarie.
Yeah, exactly.
So, which, Macquarie has got, I think, looked up this morning, 938 billion of assets under management, and they're worth 77 billion. So they really are quite similar. And you know that Macquarie got actually totally stiffed by that. Did you see that ports deal that got done where Trump was saying, we want to take back the Panama Canal? And so poor old Li Ka-shing, the 97-year-old richest man in Asia who has this big global ports business through Hutchison, he gets pressured, bullied into selling his 43 ports in 23 countries, including the 2 ports at either end of the Panama Canal. Macquarie would normally have bid for that, but BlackRock got the deal, and the BlackRock CEO rang Trump to get the deal. So already you've had Australia getting cut out of a big infrastructure play because Trump's bullying people and people are panicking. And the richest guy in Asia, 97-year-old, got totally shafted by Trump, and Australia missed out on picking up the assets.
Poor bastard. I mean, honestly, I'm bleeding for him. Anyway, no, but okay, that's fair enough. It is interesting that this is happening. But back to Mark Carney, we think that he could be a good counterpoint to Trump.
Oh, I think he's perfectly placed, and he's obviously going to try and win an election on a nationalistic fervour against a sort of a Trump apologist populist in Pierre Poilievre. So he was like looking at 20 points in front. He was going to be sort of a mini Trump. And
he was.
Trudeau was stuffed. So the whole sort of play, which is, get up the AFD in Germany, get up Farage, that is sort of falling apart as the centrist West establishment institutional parties and leaders come to the fore. And Carney is the epitome of that. A markets guy, a statesman, a globalist. Did you see Trump use the word globalist the other day?
Yeah. I wrote a column about it.
It's just, what does that mean? That just means you believe in free trade, free flow of immigration.
The Jewish organisation in America thinks that globalist is a kind of code word for the Jewish elite.
Yeah, the George
who are running
Soros.
the world. George
I mean,
Soros, that sort of people.
Even Speaker Johnson the other day said all these town halls attacking Republicans were being funded by George Soros-backed. It's just at the very top of the Trump administration, there are some very crazy conspiracy theories and totally unsuitable appointments. And that's, for me, that is the scariest thing of all.
Yeah.
So,
just before we get on to questions, what do you make of the Star Entertainment soap opera, I guess you'd say? It's very interesting what's going on. Where's that going to go?
Well, I mean, they've tried to sell the Brisbane casino to these 2 Hong Kong billionaires, one of whom was the long-term partner of Stanley Ho, the biggest player in Macau for decades. And they were always told that they could not be the controllers, they could not be the managers, they could just have 25% and Star would have to manage it. Anyway, Star's going broke. Shareholders lost over $4 billion, so their solution is to walk away from Brisbane, which is still another $600 million to finish the job, 13 hectares, Brisbane River, and then pivot to 100% ownership of Gold Coast. And then the US casino company Bally has come in and said we'll pay $250 million for a 51% stake. So all sorts of scavenger funds, casino companies, Asian moguls are feasting or looking to sort of snap up some assets from Star. But at the end of the day, 75,000 shareholders have lost more than $4 billion. And the governments have been too tough. They have been kicking the bejesus out of Star.
It is incredible. You would have thought that a casino in Sydney would just be a license to print money, but they stuffed it up.
Well, this is where the James Packer play comes in. I mean, no one ever thought that they'd allow a second casino in Sydney, so Star lost their monopoly in Sydney, and then Packer bid aggressively on the Brisbane property, and then Star overcommitted in trying to replicate Crown Melbourne as Star Brisbane, and that sort of sent them broke. And then the government's massively overreacted, shut the high roller business, forced them to move to cashless, did massive fines, tax increases, and just basically a lesson that you can't trust the government. If you're a heavily regulated business, they can send you broke.
Yes, and that's what's happened. Well, they are broke.
Effectively broke, yeah. I mean,
effectively broke. They are.
Yeah, that's right. So, but
in fact, they said 2 weeks ago. We got enough money for 1 week.
Yeah. Well, the last two half-yearly results, they've waited to the last day and then not been able to release their audited accounts, and then been suspended, and then done cliff-top poker over the weekend and staggered on. So, look, it's just spectacular.
Okay, before we go to questions, let's have a word from our sponsor.
People are always trying to create wealth, but protecting wealth is just as important. Secure your financial future for yourself and your loved ones with life insurance, the essential safety net for your legacy. Head to investsmart.com.au/life-insurance for an easy free quote on life insurance options. Simply share a few details about your situation to get a range of plans and prices.
Okay, so we've got a few questions about what investors should do about Trump. Serena from Dubai says, with all the uncertainty with the new Trump administration, are the days of couch potato investing in S&P 500 ETFs coming to an end? Will actively managed funds become a better bet on the future of the US? And I think this is worth just dealing with separately. I mean, that's a very interesting question, and it seems to me that the reason S&P 500 ETFs or ETFs in general have gone well is because of the way the Magnificent Seven has gone. And so if you've taken out an S&P 500 ETF or a NASDAQ ETF or something like that, then what you've done is you've basically ridden the Magnificent Seven wave with NVIDIA in particular, and that's been great. But that's going into reverse now, and it isn't just because of Trump. It's because they went up too much, right?
And the US stocks became 75% of world equity value. That is just an incredible bubble.
And so the general uncertainty about Trump is turning things around. And so it is true, I think, that the ETFs are going to work in reverse now, that the big stocks are going to fall, and that's going to mean that ETFs possibly will underperform managed funds, because the managed funds presumably the actively managed funds will make decisions that are more intelligent than simply investing in NVIDIA.
And also, I think people are underestimating the earnings impact of Trump's policies. I mean, we've seen Delta Airlines already come out with a big profit warning because, Canadians are not travelling to the US, and consumer boycotts. Obviously, you've seen Tesla shares fall by 50% from the peak. So, I do agree there is potentially significant further downside. And other sort of signs of risk in the US is there's a truckload of private equity, and there's a truckload of private credit, and a truckload of high leverage, and the banks, the US banks, and they've been falling faster than others. So you do have a risk of a little bit of a credit implosion, given there's a lot of leverage supporting those massively high US share prices.
And Tay, I think, reflects the views of a lot of people, wondering if, because he's moved his super out of high growth and into defensive, should he give himself a stop loss style indicator to trigger when he should re-enter. And a lot of people are wondering whether there's going to be a crash and what the overall, what the outlook is. I mean, obviously it's impossible to predict there's going to be a crash. Who knows? But I wouldn't be in a hurry to get into the market now.
But I think the bigger question is the getting out of the market. I mean, we've had a couple of questions about should I move from growth, to defensive, or should I pivot away from US stocks? And I think obviously if you'd done that 3 or 4 weeks ago and at the top of the market, then it's already come off more than 10%. You could argue maybe it's too late. Would have been better to have done that a month ago, but look, it could fall another 20.
Yeah.
I mean,
so look, someone who was 55 asked me the other day whether they should do that, get out, and my answer was only if you're going to retire this year or next year. But if you're in for another 10 years, then it doesn't really matter. Yeah, look, the market might go down, but the market always recovers. And if it does go down, if it does crash, or fall a lot because of Trump, then I think it's likely to recover fairly quickly. I
think the pivot to Europe is interesting. I mean, the movement in those European defence stocks has just been extraordinary. I mean, the fact that the Germans are talking about spending 800 billion, so there's going to be enormous fiscal stimulus in Europe around defence, and there's massive sort of government contraction in the US because they're just smashing the levels of government employment, across the board, willy-nilly. One way to play this may be to sort of follow that trade where the euro is going up. There's a pivot away from US exposures, debt and equities, and Europe is a safer place to be in terms of being offshore. But I guess the ultimate lesson, Alan, is always be diversified.
Yeah, that's right. Be diversified.
Keep calm and carry on.
And I think one ETF to look at if you're interested at the moment is Japan. I think that Japan is looking pretty good on the whole. I don't think they're going to be that affected by America, and their economy is doing fine.
Now, Todd says it's more local. He's been thinking a lot about the index huggers, the super funds, the ETFs, and a big cap stock like Combank. It goes up, index funds have to buy even more, and then when it goes down, they have to sell and take losses. And I guess Todd is actually just challenging the overall thesis of whether these ETFs just accentuate the ups and downs. And I think probably since they were invented in 1993, John Vogel and Vanguard, I think the lesson has actually been that no, they are the way they're structured with the daily pricing, and it actually has been a way to outperform significantly, and that's why it's become such an enormous asset class. And as long as the ETF is not sort of, a lithium ETF or something that's a concentrated area that can get wiped out, as long as it's a broad ETF like the S&P 500, the ASX 200, it's diversified risk.
And it's a way to diversify, without having to do lots of investing. You just buy one or two things.
Yeah. Now we have a question later on from someone having a crack at Vanguard and saying, can we trust Vanguard? I actually looked up the history of Vanguard. Did you know that Vanguard was named after one of Nelson's ships in the Battle of the Nile, where the British took on Napoleon, and Nelson inflicted a massive defeat on Napoleon on the Battle of the Nile in 1798, and one of his ships was the HMS Vanguard.
What's that got to do with anything?
Well, just that it's just with the French and British and everyone carrying on at the moment. Vanguard is the world's biggest index investor.
Yes.
Where's the name come from? Well, it actually goes back to a major geopolitical incident.
That's fascinating, Stephen.
Yes,
I'm glad you told me that.
Sorry, Alan. But basically the question of trying to challenge Vanguard because the investors through Vanguard, they don't own the stock themselves. It's technically owned through JP Morgan. It's not a problem.
Personally, I think the only question about index investing is what's the fee?
Yes.
Because they're all the same. Basically, you're buying petrol at a petrol station. The petrol's all the same.
Yes.
Index investing they're just indexes. The question is what's the fee? And I think, that's what we've got to find out and invest with the lowest fee. That's it.
Yeah, that's right. But there's also the patriotic question, Alan. Like, if Trump is really, going to war with everyone, should a big Australian corporate that traditionally uses JP Morgan or Citi, should they switch their corporate investment banking work to the Royal Bank of Canada or UBS or Macquarie? Like, should you reward big cap American corporates as an Australian player when their boss is going crazy on the world. And those biggest three index funds, State Street, BlackRock and Vanguard, they own collectively 15% of the ASX 200, up to 30% of the listed property trusts, because so many global investors want exposure to Australian listed property trusts. Why should three big American index funds dominate 15% of our ASX 200? We need to diversify, I would argue. Spread the risk around.
Tell them.
I've got a whole bunch of anti-American questions coming up at AGMs, Alan, like that.
Good for you. Chris says, on the program 2 weeks ago, Stephen suggested that some ASX-listed companies are failing to meet their continuous disclosure obligations and need to smarten up. I couldn't agree more. Might it not be time to mandate quarterly reporting? What do you think, Stephen? Quarterly reporting?
Too much bureaucracy, too much short-termism. Even Trump the other day said, quote, China takes a 100-year view, whereas we seem to be quarterly focused in America. So I don't see the argument for moving. I mean, of course, you get more disclosure. And I guess local governments in Victoria, we're mandated to do quarterly reporting, with balance sheets and everything. But I don't know. I think 6 monthly is enough.
I agree. I reckon 2 profit seasons a year is enough.
Can you imagine every quarter having to do a goddamn profit season? I mean,
who needs it? No, I agree.
Maybe quarterly AGMs, Alan. What do you reckon? That'd really give us
quarterly AGMs. We'll keep you busy.
Really get into the companies. Yeah. So now, David says, what do you think of the questions raised by Senator Bragg on the recent Super Fund Summit in Washington, which promised to double its investments into America and involved the senior execs of most of our big super funds? Now, David's asking who paid for it and should we have done this. And then, but I think
who went to Washington? It was all the super funds.
Jim Chalmers and many of the CEOs of the big super funds in Australia, and their basic pitch was, don't do the tariffs. We've got $4 trillion of super. We're a massive capital global player, and we'll allocate more of our money into America. But please don't put tariffs on us and be nice. So it was timed to be a sort of an influencing, duchessing exercise,
which went well because we're not being exempted from the tariffs, so they didn't make any difference whatsoever.
Yeah, so we've all copped the tariffs, and some people blame Turnbull for the fact that we copped the tariffs. But this is our two greatest powers are a massive minerals dowry in the world. Like if we turned off China's iron ore supply, $1 billion tonnes a year of steel will grind to a halt, and our $4 trillion in super. It is an enormous capital pile, just like the Norwegians at the moment with their $1.8 trillion US sovereign fund is writing multi-billion dollar checks for Ukraine. So which nations have the big capital is a big factor at the moment. And, Germany's got a balance sheet, Canada's got a balance sheet. The US owes the world $36 trillion. And we've got $4 trillion in super. It's a great thing to have. Well done, Paul Keating.
David seems to be upset that they went to Washington and wants to know who paid for it. Yeah. Well, I don't think that matters, David. Come on.
It's a bit similar to the question we've got here about Peter Dutton and his property portfolio. And I want to see his tax return. And I think that has he been dodging tax? And I just think we just should be above that. Will?
We obviously want to know if he's been dodging tax. That's bad. Has he been dodging tax?
Well, Australian politicians don't release their tax returns like they do in the US, excluding Trump, who refuses to do it. So I don't think we didn't say that Kevin Rudd or Malcolm Turnbull had to release their tax returns. So I don't see the argument for why Peter Dutton should have to release his tax returns.
I'm not saying he should. But if he's dodging tax, whatever that might mean, then that's bad.
But there's no evidence
we
that
don't
he
like
is.
that. We're against that.
Yeah, I just want to have an election that's focused on policy. And, it's a serious time in the world right now. It's really, really serious.
Dream on, mate. It's going to be...
Carrying on about, Dutton's property portfolio and...
it's going to be the usual rubbish being thrown at each other.
Well, do you think, Turnbull slagging Trump truth-socialing Turnbull, do you think, like in Canada, that Trumpism is going to have an impact on our election? What do you think?
Sure. It's going to have some sort of impact, that's for sure, of course. I don't know what.
Will people think Albanese is a bit weak? and Dutton's more likely to stand up to Trump.
So do you know anything about Telex Pharmaceuticals? Ollie wants to know about, on their business and what risks they face.
Yes, well, Telex Pharmaceutical is one of the great Australian success stories based here in Melbourne. Their shares have gone from $1.50 to $27.68 in 5 years. It's now worth $9.3 billion. It's in the top 50. And they've got cancer, I think it's kidney and other cancer remedies, and they have got serious revenues.
Well, it's targeted. So what they do is rather than fire radiation at a whole area of your body, they target through the bloodstream. They target they're able to target the actual cancer itself, and they seem to have some pretty special IP on that's protected. So, yeah, I mean, I agree with you. I think they're a fantastic Australian inventive company. You're saying that the CEO's got a big ego, is that right?
Oh, well, I've been to a couple of their AGMs, and Christian, he's done an incredible job, but he's a very confident man, and I've been amused watching how he plays his chair, because his chair is Kevin McCann. Now, Kevin McCann was the guy who Tony Abbott beat by 10 votes in the 1994 pre-selection battle for Warringah when John Hewson retired.
Oh, right.
And then Kevin went on, he was chair of Macquarie, he was chair of Origin, and then he sort of took on this emerging Telex 7 years ago as chair, and he's made 30 million or 26 million out of his shares. So he didn't become a millionaire at the Millionaires Factory, but this thing has been such a boomer. But he's a bit of an old stickler and a box ticker on governance, and so you see them spar at the AGM because Christian's a sort of a can-do entrepreneur. But look, it's just a great success story. The Parkville precinct in Melbourne, which produces great, biotech, CSL's based there. It's one of the great precincts in the world. The medical institutes, Melbourne University, the teaching hospitals, and more big pharma medical companies. So we need more Telex Pharmaceuticals.
Yes, we do. Catherine says, part of the reason for Australia's unaffordable housing market is the requirement to report to the office, usually located in a major city. If Australian employers would make remote work permanent, people would not be limited to certain congested and expensive geographic locations. Interesting point.
Well, I guess it's a bit of a statement of the bleeding obvious, isn't it, that if everyone was allowed to work from home all the time, then property prices around CBDs would fall and in regional centres would rise, as occurred during COVID. But the trade-off is obviously the benefit of people being together and productivity and
I think there's quite a bit of tension there because companies are not satisfied with people working at home all the time, are they?
Yeah.
And I think the most you're going to get is 2 days in the office, 3 days at home. That's the best you're going to get. And I think the feeling is that if you have to go into the office 2 days a week, that's okay for a long commute. It's okay to live in Bendigo or perhaps Newcastle or somewhere. If you only got to go into the office 2 days a week, you can bear the long commute for that many days, but not every day.
Because you go into the office 5 days a week, don't you? Into the ABC?
Well, actually 3 days.
3 days?
Now. It was 4 days last year. I'm down to 3 days into the ABC now.
Oh, so you're doing... Okay, so after 30 years, you've almost... Oh, you haven't gone part-time, but you're at 60%.
Well, in those 3 days, I record four things.
The Sunday
because
special
my
is
Sunday
the fourth
special
thing, yeah.
is recorded on Wednesday.
Yes.
So I'm on the air. I'm on the TV 4 days a week, but I'm into the ABC 3 days a week, which means that I can go to the bush or whatever for 4 days if I want to.
Very nice.
There you are.
Well, I'm into year 26 of working from home, so I don't think I'll ever be putting on a suit and going back into the office. Now, anything else happening in housing, Alan, generally? I mean, we always have a housing debate, so prices are still holding up.
Prices went up again in February, so they'd fallen for 3 months in a row by 0.4% in total. This is the national median. So it looks like the housing correction that we had to have involved less than 0.5% of the national median price, and now prices are on the rise again, basically because interest rates are coming down. That was the February rise was in anticipation of the March rate cut. Now we've had the March rate cut. The expectation is that house prices will continue to rise. So the project of getting houses to be more affordable is now on pause, shall we say.
Now, Tash says, I'm hoping you might be able to offer some thoughts on the recent decision by NGS Super to discontinue their member direct option for individuals. This is forcing all DIO super holders to sell their shares before June 30, 2025 and suffer any subsequent capital gains tax consequences. Is there anything affected investors can do?
What is a DIO super holder?
I think that's where you do it yourself, where you're using the super fund, but you can buy stocks, you can manage it yourself. And look, Tash is right. I looked this up. So they are shutting this option, and of course I should say that NGS Super has 115,000 members. It's independent schools and community professionals. They've been around for 38 years and they manage 15 billion. And they've said OneView Wealth, which used to provide this, they've withdrawn this service. We didn't have that many people using it, so we're just shutting it down. And so you can't, if you've got a big shareholding in BHP, you can't transfer it out. You have to either sell it or they will liquidate it. So it is a forced liquidation. And I think this goes to the question of we should have had more super mergers, and this should be a mandatory thing that you offer. You can't just offer this and then just liquidate it. So I'm disappointed in this particular industry fund.
Well, thanks for drawing that to our attention, Tash. That was great. We're against it. We are.
Absolutely.
Joanna says, thank you for your awesome podcast. No worries, Joanna. Thank you for saying that. Trump keeps on saying other countries are ripping off America because of the trade deficit. Does he actually include the US tech companies, such as Microsoft, Facebook and Google, making billions from other countries and not paying their fair share of tax? Good point.
Well, this is right. I mean, the tech companies are basically selling services, and America has a massive services surplus with the world. The Magnificent Seven are worth more than $20 trillion because they are selling an enormous amount of services to the world, controlling the highways of the internet.
And not paying any tax.
Well, paying some tax.
Not much tax.
They could pay more.
The services are being supplied to Australia and other companies from low-tax countries.
Yeah.
That's what they're doing.
That's right. But I think this whole sort of Musk and Starlink, there will be a debate when this whole black swan crisis is over about who controls the global highways of tech. You know, should big American companies be able to switch off? Could Microsoft, Amazon, if they went hostile with the world, I mean, that could be a disaster. So I reckon you're going to get a big debate about the power of US tech, because they make massive, massive profits from the rest of the world. And if Trump withdraws and launches trade wars, well, then the profits of those big tech companies are going to fall because companies are not going to roll over for them.
Well, that's interesting. Okay, your turn.
Finally, I think we've got a comment from Alex, which is a good one. I love the podcast. Last episode, someone asked a question about why the RBA doesn't set different interest rates in different states. And it would have been better to answer the listener's question by explaining how the RBA implements its target cash rate. The rate is the target overnight lending rate for banks to lend to each other. The RBA has a corridor system where it pays interest on settlement account balances a bit below the target rate, and it lends to banks overnight at an interest rate just above the target rate. Therefore, the banks arrange their overnight operations in a way that lending to one another is at the RBA's target rate. So there is no way to have different rates in different states because banks operate across state borders. Do you agree with all that, Alan?
Yeah, that's exactly how it works. Alex is right. Sure. I mean, we didn't go into that. We just said that it wouldn't work.
Well, as Tony Jones would say on Q&A, thank you, Alex. We'll take that as a comment and a correct comment at that.
Yes. Thank you, Alex. And thank you, Stephen. Thanks, everyone, for listening to today's episode of Money Café. I'll be back next week with James Thompson. Send in your question to themoneycafe@eurekareport.com.au. Until then, I'm Alan Kohler, founder of Eureka Report and finance presenter, columnist on the ABC.
And I'm Stephen Mayne, and we'll see you in a fortnight.